All right, guys, it's Angelo Christian with another great edition of Real Estate Insider, and today we're going to be talking about student loans. It's a huge, huge topic, a multi-trillion-dollar industry, student loan debt, and actually how it affects your credit and how it affects you when you're buying a house. It's a massive topic that a lot of people, regulators, politicians, people, consumers are talking about all over the country, how to deal with student loan debt. And recently, the government has changed how people qualify with buying a house when you have student loan debt. Before, if you were in deferment, you're able to omit those student loans. That's not the case anymore. If you're trying to buy a house now, your student loan debt does matter, and it can affect how much you can qualify for. And so today, we're going to be drilling down and talking about how to deal with student loan debt if you're out there trying to buy a house, because it will affect you guys. I've seen people get denied for buying a home, denied for getting a mortgage to get pre-approved because they have too much student loan debt. So today we're going to be looking at the different programs and actually how they treat student loan debt for qualification with respect to your debt to income ratio. So the first thing I want to talk about is I firmly agree, and I had student loan debt. I went to college, took on student loan debt to get my education, my degree in finance and economics. So I'm a firm believer in education and getting your degree. And, you take on debt. I took on Sallie Mae Navient student loans to be able to go to school. So a lot of people do that, and you shouldn't be penalized or punished when you're trying to buy a house. The thing is that the government has changed, and the investors, regulators, underwriters have changed the way they qualify people when they're actually trying to buy a house and how they determine the debt to income ratio for qualification. So we're going to look at the different programs: FHA, VA, USDA, conventional portfolio loans, and how they actually treat student loans, so that way you're aware, and then there's some solutions on how to handle it. So we're going to take a typical example here, somebody that has $50,000 in student loan debt. So for all of these scenarios we're going to be talking about, we're going to assume $50,000 in student loan debt. That's the average national student loan debt. And they say by the year 2030, the student loan debt will jump to over $80,000, increase by 57%, because student loan debt is rising, and it's in the multi-trillion-dollar debt industry. It's huge. So, but the point is that in this example, what I want to share with you is that if you're trying to buy a house, how the banks look at qualifying you with student loan debt. So first off, when we talk about FHA loans with student loan debt, the way they look at it with a $50,000 balance, even if you're in deferment and you're still in school and you're not making the payments, they're going to do something called a 1% multiplier on your debt to income ratio. So if you have $50,000 in student loan debt, they multiply that by 1%, and that's $500 a month that goes into your debt to income ratio. So now what happens is when you go and try to buy the house, that $500 is going to be plugged into your debt ratio, and it's going to affect how much you can qualify for when you're trying to buy your home. And this is the issue that I'm seeing in the world right now, in the industry, is that house prices are going just higher and higher, and student loan debt's going higher and higher, but the wages are not going up. So what ends up happening is the person qualifies for less house, but that house ain't there. So in this example, even if you're in an income-based repayment Obama plan, they don't allow that. They don't accept it. So when you're trying to buy a house with FHA, income-based payment plan's not allowed. Deferment's not allowed. Forgiveness plan's not allowed. Don't accept it. The only thing that's allowed is the 1% multiplier, or if you enter into a fixed payment plan, a 25 to 30-year fixed payment plan. Okay? So you have to get a quote from your provider to give us a payment plan for 25 to 30 years, and we can use that. And that's the solution, guys, because the 1% multiplier is going to throw you out of the water to qualify to buy a house. Typically what we see in this example, if you have $50,000 in student loan debt and you do the 1% multiplier, it's $500. But if you do a fixed plan, it normally cuts it in half. So from $500 a month, it can go down to like $250 to $300 a month. All right. And that is much better for qualification when you're trying to buy a house, because do you want a $500 debt in your income ratio, or do you want a $300 debt? Obviously, you want the lower debt so you can qualify for the house that you want to get. And that's really the solution here, guys. Whenever you're trying to buy a house and you're in deferment, or you're in the income-based repayment plan, they will not accept it. All right. There is one program that does allow it. We're going to talk about that, and we'll go into the details and explain how that works. But for FHA loans and USDA loans, you have the 1% multiplier, or you have to enter a fixed payment plan. All right. So forget about it if you're in a forgiveness plan and your company said they're going to forgive the debt, or the provider said they're going to forgive it. They don't allow it, right? And they don't allow income based. If let's say you're paying $20 a month on your $50,000 of debt, they will not accept it. They're going to hit you with the 1% multiplier, and that will affect how much you qualify for. So the solution, in order to get the house that you want and qualify, is to enter into a fixed payment plan and get a quote. Now, all I need is just a quote from your provider. You do not have to take your student loans out of deferment or take your loans out of the income-based plan. Give me a quote for the fixed payment plan. Send that to me, and I'll use that payment to qualify you so you can get the house that you want. Now, I want to talk about VA loans now. I'm going to go from FHA, because that was for FHA and USDA loan programs. Now we're going to talk about VA. I really love VA loans because they're so lenient on the veteran, especially when it comes to student loan debt. So for VA loans, there are way different requirements. So if you have your student loans in deferment, and you can keep them in deferment for up to 1 year after your closing, they'll accept that deferment. So let's say that your student loans are zero, and you get a letter from the provider showing that those student loans are going to be deferred for at least 1 year after the closing date. We can accept that. So let's say you have $50,000 in student loan debt, and you give me a letter from the Navient or Sallie Mae showing that the student loans are going to be deferred, and your closing date is September 1st of 2018, and the letter shows that the student loans are going to be deferred till October 2019, then I don't have to do anything to your debt ratio. I can omit the debt. Okay? The other thing that we can do, if you're in an income-based repayment, all right, and that shows on your credit report that you're in an income-based repayment, we can use that payment to qualify you. The 1% multiplier does not apply. So that's a really, really cool thing. So that's why I love, if you're a veteran and you got denied by your lender, or they said they couldn't qualify you for student loans, they don't know what to do, and call me and I can help you to get you pre-approved, even if you have a ton of student loans. All right. The other program, that conventional loans, if you're trying to get a conventional loan, this is where it's different with conventional loans. Whatever the payment shows on the credit report, that's the payment that they're going to use. All right. So whether it's an income-based, forgiveness plan, Obama plan, if you have $50,000 in student loans and the payment shows $300, that's what they're going to use. If the payment shows $60, that's what they're going to use. They will not accept deferment, though, on a conventional loan program. So deferment is not allowed on a conventional type loan program. So they either have to be into a payment has to report on credit for conventional loans, so that way they can use that to qualify you with your debt to income ratio. Okay, so that's a really, really important thing too to keep in mind. Now, the one thing I do want to also bring up, if you have student loans that are in collection, this is a huge thing. You have to get your student loans in good standing before you can close on your house. And generally, before you can apply for your loan, I recommend you have 3 months of good payments in good standing before you apply for your mortgage loan to get your student loans in good standing. You cannot close on your house if you have student loans that are in bad standing. All right, because you can't get a government loan and then you're in default with the government at the same time. They run you through a background check, and they see if you have any defaulted government debt. And they'll ding you and they won't qualify you, because if you're defaulted in arrears with your student loans, you won't be able to get a government loan to buy a house. So make sure that if your student loans are in arrears, you can put them in good standing. And as long as you have them in good standing for 3 months, then you're eligible again to be able to buy a home. And that's a rule, that's a law with government loan programs. That's not something that my company sets a requirement on. That's something that the government requires. You need to have. Now one of the things that we're different, we only allow 3 months of payments. Most companies won't approve you or help you if you're in default on your student loans. You have to be in good standing for at least a year. We just require 3 months. So we're very flexible and understanding when it comes to that. So get your student loans into good standing if they're not. And the other thing is that you don't want to have your student loans in collection either. because you don't have to, bill collectors calling you and harassing you, coming after you, and then it goes into your debt ratio. So you don't want to mess with that. So, and if you have questions about that, you need help, give us a call. But that's how it works, guys, with student loans. And this is a huge topic. So don't be afraid. The moral here is how to calculate student loan debt and the solution on how to overcome it when you're trying to buy a house. If your lender denied you, said you didn't qualify because you have student loan debt and didn't know how to handle you or treat you, give me a call. My name is Angelo Christian. I've been doing mortgage lending for over 15 years, commercial lending, residential lending, reverse mortgage. Anywhere in the country, wherever you are, I'd love to help you, whether you're trying to buy a house, refinance, reverse mortgage, buy an apartment complex, buy a business, refinance your business, refinance your hotel. I'd love to help you with any financial lending things that we can. That's our mission here with the company, to give you the best loan program, to put you in the best financial position and help you any way we can with your credit or realty. So if you have any questions, you need anything, you can call me directly at 832-431-6331. That's the other thing, is that you work with me directly, and I help you. You don't get pawned off to a third party or a middleman or a telemarketer. You get to work with Angelo Christian directly. So that's another great thing, that you get me. Other companies, you work with a loan officer, or you work with a telemarketer, or just a personal banker. With me, you get my personal touch, my experience. I've been doing this, like I said, for 15 years and helped over 13,000 people, families, with their apartment complex financing, their bank financing, mortgages, and that's over $1 billion in lending. And the reason why I'm telling you that I'm not practicing, I'm an expert, and that's what my license shows. I've been licensed now for over 15 years and helped thousands of people. So I want to help you, whether you're a veteran, you're a first-time buyer, millennial, you're a savvy investor, whatever you're trying to do. I'd love to help you with any of your financial goals. Again, thank you guys so much for following me. We're really trying to grow our YouTube following to 1 million subscribers. Please share this with all your friends and family. Our goal and mission here is to educate and empower people with finance and real estate. Click on the chat box below if you have any comments or anything else you want to see, or any new shows. Please watch us on our Facebook, our Instagram, our YouTube. We really love what we're doing here. We work really hard at our network to produce great content to empower you and teach you. Guys, my name is Angelo Christian. I hope this is a great addition for you for how student loan debt, how it affects your credit, how it affects you when you're trying to buy a house. Be smart. If your lender denied you, said you can't qualify because you have student debt, it's not true. Let me help you. Call me at 832-431-6331. That's Angelo Christian. Or you can click on the link below to get started right now, so we can help you to get you pre-approved, whether you're trying to buy a house, refinance, buy an apartment complex, refinance your building, fix and flips, whatever it is. Give Angelo Christian a call. I want to help you with your financial goals. Take care and peace out. Bye-bye.